Welcome to the Capital Discussions OptionVue Education webinar series. I'm Tom Nunemaker with Jeff Plimpton from OptionVue Systems International. Now, before we get started, a quick disclosure that Capital Discussions is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations. The risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer simulated trades are believed to be accurately represented. However, actual profit or loss may vary due to market factors such as liquidity, slippage, and commissions. And again, this is for educational purposes only. And with that, we welcome Jeff back. Jeff and I go back a long time. Probably 8 years or more. So it's always a pleasure to have Jeff on, and welcome, Jeff.
Yeah, thank you, Tom. Yes, always a pleasure. Tom's done a great thing for you guys with capital discussions and the road trip trade and everything that's going on over there. So I always happy to talk to you guys. Today we're going to talk about earnings plays done through our earnings module in OptionVue 8. The earnings module is not something you guys can see. We don't have it set up through trials. So I really appreciate you guys showing up to kind of go over it with us. It's really had some remarkable results. And I think many of you know earnings causes movement in the underlying as well as volatility. And I'm going to break down for you how the module works, and I'm going to show it to you on OptionVue as well, kind of give you a procedure to follow if you decide to use it to enhance your earning, not just options trading, but trading earnings plays. As Tom mentioned a moment ago, this is for education. This isn't to take anything I come up with and go trade it. If you do, it's up to you. It's included in the OptionVue 8 subscription, and a lot of people have been asking where our earnings, where we're getting our earnings dates. Right, companies sometimes even change their earnings dates right before the conference call. So it's coming from optionslam.com, and you guys can look that up if you'd like. The dates will come up in the matrix, and it'll tell you whether the earnings is going to be before the market opens or after the market closes. You can even see past earnings dates. We have earnings markers in the price chart. I don't know if any of you are using that, but you can set up on a global basis for all assets where the earnings markers are located, and we can see what the earnings reports, what kind of movement it caused in the past. Although, quite frankly, from my experience, just because it went up or down in the past does not mean it's going to do the same thing. I haven't found it that predictable, which is why we're trading straddles and calendars and things on these earnings moves. Jim Graham in our office asked me to mention that we have an earnings search for everyone that has the software. You don't have to have the earnings module to scan for earnings prospects. So that's what that's about. Make that quick. Many of you have read some of Brian Johnson's material. I went through exploiting earnings volatility. I don't want to pretend like I understood all of it because I didn't. We've tried to set up Excel spreadsheets using the volatility modeling that Len, Brian, and a few other mentors have worked on with Len Yates. The coolest thing about the horizontal skews in the software now in the earnings cone is across 8 earnings plays, the algorithm predicts what the volatility crush will do to your earnings plays. It's something I haven't seen anywhere else. I don't know if iVol has anything like that, but it's been a pretty cool thing. It give you a pretty good idea how the vol crush will affect your options trades. I'll skip that. Ramp up, IV approaching. we know when the IV, the implied volatility is approaching earnings, it escalates, right? Goes up. And we can take advantage of that, especially for calendar spreads, for instance. The question is, and what James and I in the office have looked at, will the vol crush, particularly on some calendar spreads, how will that affect the trade? And I'll show you a trade, some trades we've been looking at using Trade Finder to find these situations where it'll actually go through the vol crush. We'll talk about that a little later. So I talked about the horizontal skew cone and how it handles the volatility escalating and the volatility crush. So when I opened, we were talking about the earnings module, and what happened with this is ways back 3 years or more, Len Yates had this, I don't know if it's an epiphany. I think we all sort of know in the back of our minds. For instance, after MasterCard has an earnings report, whichever direction it moves, maybe Visa will follow the same direction. Or one I did recently was with Baidu. After Google moved, Baidu followed the same direction. That was kind of the start of the earnings module. And what he did here was break the module into 5 sections. So prime movers are stocks that make big moves. Options tend to be undervalued, right? There's a little edge we can take advantage of. What I've been doing is prime non-movers. I'm doing calendars on them. Obviously, I'm not looking for the underlying to make much of a move after an earnings report. So those are stocks that make smaller than expected moves, and the options tend to be overvalued. Again, good for selling that front month. Earnings pairs kind of buys into what Len was originally thinking. 2 stocks in the same industry, only one of which is announcing earnings. Okay? And the second one theoretically will follow that same path. Echoes is a little more specific. 2 stocks in the same industry, with one announcing 1 to 18 days after the other. And runners, which you'll see in a moment, seem to have the highest returns. Stocks that tend to run in price after the earnings announcement. And again, when I first looked into the earnings module, I realized, I've kind of have followed that over the years anyways. But leave it to Len. He took action on it and built these algorithms to give us higher probabilities of outcome. So we have an ongoing earnings calendar. Earnings plays are generally done in January, April, July, and October. But this calendar, as you can see, it keeps going. This display that Jim printed out for me is from May. And look at this, there's plenty of trades going on, plenty of action. And if you want to look for a trade, simply the first thing you'll do is make sure you update your imports on earnings every day, but look at the earnings calendar. Plenty of possibilities. And we'll talk about the quality of those possibilities in a little bit. Now, when we do our imports each day, I want you to know we can actually filter the quality of the imports. We can have minimum quality ratings, which is the first column there. We can have minimum dollar volume of options, which is in thousands, right? Maybe we're only looking for high liquidity. And a lot of us probably already have rules that we don't trade, I don't know, stocks under $20 or stocks under $40. If you have rules like this, you'll start to tweak those rules a little bit for these categories. And you can see this is how Jim Graham does it. Mine's actually a little different than this. But we, again, can filter our success rate by importing assets that'll fit our criteria. So this is something we do every day. We import our earnings plays every day. And you choose the parameters. Okay. One thing we do every earnings period, Len calculates it across 8 earnings periods, but we check and see. Jim runs about 90 trades and sees if we put $2,000 into all of the positions, see how they would come out. I think this quarter is just from the fourth quarter, and he says this quarter doing them all, there were 9 winners, 14 losers, and it is down. In other quarters, it was the best performing strategy. Oh, he's talking about prime movers here only. In terms of the quality, though, when it's winners and losers, there's a little bit more on the loser side. If the quality is generally, it makes 20%. Well, that means even though there were more losers, the winners came in strong. So when we look at a graph a little bit later, we'll take that into account. Even if there's more losers than winners, sometimes it comes out well ahead in the numbers. But not this time. We were down this time. And that's going to happen. I'm sure we've all had our moments trading. This was on a straddle.
Hey, Jeff, there was a question. How is quality defined?
You know what? We'll be looking at that in just a moment.
Okay.
Okay? Yeah. I mentioned earlier, runners has been the best performer. This really shows it. 72% of runners came through. Because you're going in right after the earnings report. So based on how it opens after announcing earnings, buy a call or a put, very simple, right? Probably not what you guys are used to. You not only have multiple legs on, like with a butterfly, then you're throwing other legs on to adjust them. This, call or put, just follow it, usually just for the day. Although I've had people in the module tell me they stayed in a little longer. And I certainly stayed in like an extra day a couple times. Just bought 60 October puts, 7 at a cost, 7 contracts at a cost. Sold at 2 o'clock before the close. Profit 4,249. So again, you'll see in a moment, runners is the best performer. Although in general, I'm doing calendars on non-movers, but don't worry, I didn't forget the quality. Let me write that down because we're going to look at that in a little bit. Quality is generally the percent that you make across 8 earnings seasons. That's what quality is. It's the percent return. Maybe I should just say that up front before I go on and forget. So this chart is across all categories, and it's for the last quarter. But I think it's very interesting how well runners performed. And, I think traders feel pretty good jumping in after they see what direction it's headed. Much easier, right? I'm getting in on the prime non-movers, which did okay. But I kind of know, that's why I want to show you this in Trade Finder. I sort of know when I find the right situation to do these calendars. I told all of you, Jim's running all of these, 35 winners, 40 losers, 75 recommendations. But that's not practical. I hope you'll agree with me. We're not going to run 75 trades. So we're going to have to use, like whoever asked that question, quality ratings, what's happened in the past, how comfortable we feel doing straddles, strangles, calendars, to do these on an earnings situation. My guess is some of you are going to know a lot of these assets really well, and you'll have a feeling for how it's going to move at earnings. But you can see across net profit, 14,537, and 72.7% return. Jim did pretty good. But again, it's trading. So I would like to bring up my software. Tom, I can just drag it over, can't I? Can you see it?
There, I can see it.
Okay. I ran a report this morning on American Airlines. I was starting to go down the list for prime non-movers. That's where I'm going to start. And I just want to show you, I don't know if this is going to be very legible. Can you read that, Tom? This is the earnings notes that are on every asset in each category.
Yeah, we can read
Probably
that.
not real clear.
No, it's fine.
Okay. I'll hit quality again. So the expected quality for a naked straddle or strangles 22% return. Now, you'll see in the upper right-hand corner, right, I think we get knocked into our heads no matter who our mentor was or who we've traded with, is that risk management is the key to this thing. We already know from Lens algorithms that the past successes are 6 out of 8. Pretty high probability of outcome. DVO, very liquid. I really wasn't worried about that for American Airlines, but it posts it right away, and then it'll suggest what trade to do. So in this case, sell a naked straddle or strangle near the close on 420, close the position anytime following in the following day, although historically it has been profitable to hold until near the end of the day. So he's got multiple algorithms running these through the information that comes in from OptionSlam. Now, I'm not trying to confuse you, but I didn't take this suggestion for a straddle or a strangle. I just want to show you real quick what I ran in Trade Finder. I ran American Airlines under selected assets. My guess is you guys, I'm just guessing, but you probably don't run Trade Finder. I mean, you all know how to design your own trades. But in this case, it's sort of necessary to meet the criteria I was looking for a tool to do it, not just to design a calendar spread. Okay, targets. When I run this for a calendar spread on an earnings situation, I always run bell curve. Okay, if I just click on these little icon buttons over here, it'll automatically put in the current center price, the volatility situation, and it will go out. When I click on this, it'll automatically go to the earnings report, which is pretty cool. So it helps me right up front. Now you'll see I'm only going to run this on horizontal debit spreads. That's all I'm interested in. If you ever wanted to start tinkering with Trade Finder to find adjustments or find trades, you can pick and choose. You can select them all if you'd like. For goals, I put in $3,000. We're going to keep this in mind when we go back to the report here, which I ran earlier. I don't use much in the way of filters. You can see, maybe since you go way back, I know Tom does for sure, he's added a lot of filters too. I did not find that to be necessary. I just put in open interest is greater than or equal to 1. I do not want it picking strikes that don't have any liquidity, and avoid selling deep in the money American-style options. He even built another filter tab. Again, you're welcome to look at this on your own, but I'm not using any additional filters. So I went ahead and ran this report. And here's the two things I was looking for. Len does this too, and it's really worked quite well when we find the right scenario. If you recall, we put in $3,000 into the tool, and we have an expected return. This is worst case return, expected return, and best case return. An expected return which is actually more money than we put in. Right? That's kind of remarkable in itself. Probability of outcome. I'm a little more lenient on calendar spreads, but the probability of outcome was 84%. And here's the other key. I'm looking for a really low net price between the front, the sell, on the horizontal spread, and the back leg. In this case, it's only 7 cents. Now, of course, it's going to have to move the way we're predicting. Let me blow this up a little bit here. I wanted you to notice a couple things on the risk graph. Len put in these. I don't know if you guys can even see them, but he put in diamond shapes for. They don't show up, do they, Tom?
Yeah, we can see them.
Okay, they're right down here. I'm kind of pointing at them for where this asset tends to fall after an earnings report. Tends to fall between here. This calendar, however, is set up kind of to the bear side. I might actually move that if I decide to put it on. But what's interesting is if I can show you the vol situation. Let me put in a few lines here. It tends to work out really well, and I've stayed in these a few times now after expiration, even with the vol crush. This is something you'd have to experiment with and do a little back testing. I did that, and then I traded with James, my friend in the office here. But they were pretty remarkable, and Len does them too. We haven't shared this with a lot of people, but it might be worth testing. I'm well aware that you guys with mentoring at Capital Discussions and doing things with Tom and Dan Brady and Jim that you do testing. This might be worth testing if you have OptionVue and you can go back in time and try a few of these on different earnings dates. I was just looking at it real quick. I won't comment on the detailed analysis, but the returns on these have been pretty extraordinary. We've had sometimes hit like 400 or 500%, which hasn't happened to me that often trading options. So it was pretty remarkable. And I just wanted to show you that. Obviously, I would change the number of contracts here. But that's that. And I think I'll bring up one other one here. I don't know if we want to talk about Delta Airlines. They're having lots of problems. Let me bring up. I want to say there's some that are 7 out of 8 success rate. And again, 25% return, and you can just follow the instructions. So if I don't know how your group is segmented, Tom, but if you have people that are more on the beginner to intermediate side and they want a little built-in instruction based on these algorithms and history, might be something worth checking out. We've had some really great returns and some people in our database that are very happy with this earnings module.
Hey, Jeff, Jerry asked a question. He said, what was your point on the diamonds and symbols on the risk graph?
That historically that's where the price falls after the earnings, that it'll fall between those two diamonds on the analysis. Any other ones on there, Tom?
That's it so far.
Okay. That's really all I had today. It kind of went pretty fast. If you guys don't have any other...
Well, do you have any updates on what's coming with OptionVue or things that you've added, improved, or changed recently?
He hasn't done a release in a while. So the most recent release I have is from March 9th. I got a question this morning, and I asked Len if you guys might be interested in this, about sending trades to IB. Do you get that question much, Tom? You're in Germany.
No. Well, I mean, I trade the U.S. market, so I'm just like everybody else.
I got that question this morning. I asked him, and he said, well, it's not that he wouldn't like to do it, but they have a very crude API, I guess. And he isn't closed off to it, but it doesn't look like it's going to happen real soon. I haven't had that many other software questions lately. Fortunately, after the modeling problems, I'm happy things have been running fairly smooth.
I saw in the release notes that you guys are working on a new model that was, I guess, intended when we had that model change a while ago. How's that coming along, or do you know?
I don't know, but he comes back and seems to talk about it periodically, so I believe it is being worked on. I'm sure you all realize he's got a list of things but that one's kind of towards the top. I think because Len finds it fascinating too. So I think he is working on the modeling.
Jim posted in the chat, the biggest thing Len's working on is a new interface for TOS and IB that's designed to address the problem of interference of typing in the matrix. Well, that would be good to fix.
Yeah, I don't know if any of you have had the keyboard issue. He's certainly working on that. Like you hit a key and it pauses. Oh, I hope it doesn't ring a bell with any of you.
I'm using QuoteVue, so that doesn't matter for me. But
okay, that won't happen for you. But people on Thinkorswim in particular, sometimes the keyboard gets hung up for some reason, and Len's been working on that.
Now I know you guys used to support eSignal, and I think you still do. I tried getting an eSignal subscription, a year ago, and had trouble getting it connected. Maybe at some point you guys could do a demo of how to, or maybe there's a video already of how to connect OptionVue to eSignal data.
It's pretty simple. You just click on the globe in the upper right-hand corner. eSignal's still on the menu.
Oh, yeah.
See that?
Are there any gotchas that you know about?
Not that I know of it, but to be candid, I haven't had anyone come at me. Jim just typed to me, "We still support eSignal." Yes, I know. Yeah, we still support eSignal, and you can pull it in.
It's very fast.
Yes, he did.
Maybe
but
Jim,
people
maybe
have to pay for eSignal. They're not.
Yeah, it's like $200 a month.
Yeah.
What's the? Is there a speed difference between eSignal and the QuoteVue? I don't know if Jim knows.
I would think eSignal would be quite comparable. QuoteVue is very fast, 1,000 or up to 2,000 symbols at a time. I don't know specifically what it is. I could email it to you, Tom. I'll ask Glenn.
I really like
but
the
I'll bet you it's
charting.
fast.
Yeah, I'm sure it is.
Yeah, I like their charting too.
And Jerry says he spoke with
Jerry
Link
says,
about the
there were some bizarre bends in the step-through dates on the graph, but that hasn't been happening for everybody, so I didn't bring it up, but he's right. I mean, he definitely had some, and him and Ken have been working on it with Len.
I noticed, for instance, if I do backtrader at the end of the day, and I go to the half an hour after the market closes to catch the last 15 minutes of options trading, the T plus N lines are all kind of messed up. So I go back to the 4 p.m. Eastern time, and then they're all fine. I was just wondering if that's a behavior that you guys are going to work on, or if you even know about it.
I didn't know about it, so I will talk to Ken first about it. So you're saying after the close?
Yeah, so if I set the 4:30 p.m. Eastern time in backtrader, then the T plus N lines get kind of wonky. But if you go to the 4 p.m. Time, then they're all fine.
Why would they get funky, though, right after? That's weird.
Well, probably quotes at the end of the day kind of get, maybe they widen out the bid-ask spread overnight. I don't know.
And it causes kind of jerky lines, possibly?
That could be the problem. I'm not sure, but I just noticed it. So when I do, like, for the road trip images, I always do it at the 4 o'clock time, and then it's fine.
So that's right at the close, right? You're talking about Eastern time, so okay. Anything that would help is Ken mostly that gets caught with these things, and then he brings them to Len, and they talk about it in their tech meetings. So anything, if you guys have ideas, Jerry's been very helpful. He's worked with Ken on this. Oh, he's saying bid ask, not trades. Yeah, I agree with both of you. It might have something to do with the bid ask spread.
I don't know if there's anything you can do about it, because it might just be the nature of it, but just something I observed. Yeah,
no, thank you. And that's also kind of what happened with the keyboard issue with Thinkorswim. It's sort of the nature of the beast, and now he's trying to work with, it only brings in like 125 symbols at a time, and seems to be causing trouble with the keys communicating to the software.
Right.
There's always something,
Well, any more
Anything
questions
else?
for Jeff? Well, we've got him here. I don't see any in the chat.
I would like to be able to import trades from IB. We can import trades from IB, and we can send you a letter on that. I didn't catch Andrew's last name, though.
Stanton. I think I actually made a help page.
Yes,
on the
you
Capital
did.
Discussions
That's what
help.
I send people. Andrew Stanton. I will look him up. And yeah, Tom, I often use yours. I got a couple others too, but yours is very clean and nice.
I think I need to update it though. I think something changed. I'll go review it and make sure it's current. And then Srini asked, how much does this module cost? Do you have any other quick demos on Aeromir?
Yeah, I'm sorry, I didn't even go back to the PowerPoint. The module last year was $2,400, and we redid all our pricing, and it's only $1,200. So I hope that might spur someone to give it a shot too, at least for a year. So $1,200 is the answer to your question.
And then Jerry asked if you have any other demos for earnings. Any other trades you could go through?
I don't have any for that calendar spread. That's why I wanted to do it for you guys. There's other earnings demonstrations out there. We've actually been doing a series on it. Jim Graham even went over the modeling. And the other one that's been very popular, and I think you guys all know that's the VXX. We have Len Yates did a pretty highly produced 2-video series on VXX, and we have about a 20-page ebook on VXX also. So there's plenty of stuff on the earnings module and trading earnings. And, of course, there's plenty of stuff on OptionVue, but you guys are always welcome to call in if you want to go over anything, as Jerry did when he ran into these squiggly step-through dates. Yeah, we'd be happy to talk to you. Just give us a call.
I know you mentioned Brian Johnson early on. Brian's actually being a presenter on the roundtable on Wednesday. He's going to go over his new book on hedging.
Yeah, you know what? I should sit in on that. At least a couple people have mentioned his new book, and I looked it up, but I have not had a chance to order it yet. But that should be excellent.
Yeah, I got it.
So everybody go to that one.
It's he calls it an article, but it's about a 100-page book, so it's a big article or a small book. And it goes through a couple different ways of hedging, like VIX calls, teenies, a few other things. And he has a spreadsheet that comes with it. So it'll be an interesting presentation, I'm sure.
Yeah, that will be an excellent one. I didn't know it was only 100 pages. I did look it up, and I thought, I got to get that ordered too.
Yeah, it's $10 at the Kindle purchase.
Excellent.
I've been buying
Tom,
less paper books.
You're getting a lot of good people over there, Tom. Good job.
Well, it's fun. It's a nice community and a lot of great people in it. So I'm happy to keep things running behind the scenes.
That's good. Well, I appreciate you, and I appreciate you having me on. Thank you very much.
Oh, you're welcome. Any last thoughts before we leave?
I don't have anything. I wish I had more on what Len's working on, but I guess the predominant thing, like you said, would be modeling and that keyboard issue for anyone that's having issues. And I know Ken's already working on your thing, Jerry. You guys are already working on that, so.
Fantastic. All right, Jeff, I guess no need to drag it out. We can wrap it up since we're basically done. Hope you had a good Easter, and as always, it was great to catch up and see you again. So thanks for coming.
Same here, Tom. Thank you very much.
All right, thanks everyone. We'll see you later.
Thank you, everybody.
And don't forget about Brian. He's on Wednesday at 11 Eastern. So if you go to our blog, capitaldiscussions.com/blog, you'll see a sign up for the webinar if you're not already getting the roundtable notifications. So thanks again, and hopefully we'll see you Wednesday, and if not, next month for the next installment of the OptionVue Education Webinar Series. Thanks again, Jeff.
Thanks a lot, Tom. Thanks, everybody.